position over the next 39 days is going to set yourself up to succeed and thrive in 2026. A lot of the stocks that are selling off right now are going to be some of the biggest runners next year. And next year, as the Fed is cutting rates, as the money printer's being turned back on, and as AI CapEx continues to explode, you're going to think, why the hell didn't I buy the dip on these specific deals? So in today's video, we're going to break down, number one, what history says is coming next for the market, the historical data. Number two, why this is an unprecedented opportunity. And number three, the specific stocks that I believe are great buys right now. I'm going to make the case for them category by category. Each of the stocks that we're going to talk about is favorably down from all-time highs, has extreme proof of concept, has a beautiful competitive moat around it, and is something that you can feel good buying now, buying over time, and holding through the volatility. And it's something that I believe that if you look back in 1, 2, 3, 5 years, you're going to be like, wow, I'm so glad I bought that stock. And I'm going to put all the timestamps down below, so make sure to check those if you do want to skip around a bit, but I highly recommend that you watch the entirety of this video because, again, you want to set yourself up for success next year. And as always, if you're the one taking the ultimate risk, you got to be the one doing the ultimate frisk. Always do your own due diligence on all ideas presented. Okay, so for starters, quick plug. Right. We always save our biggest sale of the year for Black Friday, and this year is no different. If you'd like to get $100 off our annual Discord membership, make sure to do so with that first link down below. Okay, so let's start. So as you know, we've been in a choppy November, a chop-vember, so to speak, and it's been an especially aggressive month for AI and tech names, which if you're a growth stock investor, I mean, quite frankly, it's felt like we're on the Titanic. But don't worry, the violins haven't started playing. So what is the reason that markets have been so choppy this month? For starters, the Fed's December rate cut uncertainty. Oh, we're going to cut it. No, we won't. Oh, we're going to cut it. This member says we might cut it. This member says, no way, we're going to cut it. That kind of uncertainty back and forth has freaked markets out because they priced in a cut. And now that the December cut is being debated, people are like, oh, we better start selling. The market's also down because of a much needed valuation breath and a much needed reset of multiples. Markets are down because of data fog on employment and inflation. The White House has postponed a lot of this data, and maybe it's never going to come out at all. There's been massive crypto deleveraging based on BTC breaking key support levels.
Okay. ONDS, 10 million in revenue, up 500% year over year. Okay. They also have 300 million float. $400 million raised in October at 1150 up here. So well, that's crazy. A board member is possibly going to be appointed ambassador in the Netherlands. Okay. $500% year-over-year revenue jump. So okay. And yeah. Basically, Trump came out with FAA guidelines, signed an executive order. There was some sort of executive order about drones. Basically allows drone operations beyond line of sight. So that's good. I think they still have to like register or something, but I gotta admit, I'm so happy, everyone, because I turned down the memory. GRAL. I turned on the memory on Thinkorswim, and now everything's moving faster. So that was eating up my GPU. It was making streaming impossible. LVD GRAL already went up. You feel me? It already went up. Did mention on the 13th. The 13th was not the best day to mention it, seeing as it still went down about 10% after that. But you know what? I also mentioned it on the 18th. Okay. I'm not perfect, but I did mention it. You can see that over here. I've got all the mentions right here. Okay. Let's jump into a little breakdown. They already have the FAA approvals. Okay. They got a waiver for... All right. This is great. All good stuff. And then WWD. Q3, WE, whatever, 1E. They do control systems for aerospace. Blah, blah, blah. Let's see. Okay, billion of revenue. Okay. Did that satisfy your question, LVD? Already went up. And then yeah. We'll get there when we get there for Woodward. All right. Trump's drone stocks will help you retire early. This is not financial advice, but this drone stock, Ondas Holdings, ticker symbol ONDS, has a board member who, rumor has it, allegedly, may be in the running to be ambassador to the Netherlands, which of course is an appointee of the Trump administration. Trump, I'm sure, will sign something that makes that happen if it happens. Trump did sign an executive order allowing in June beyond line of sight drones to operate through the Federal Aviation Administration. Ondas already had some certifications through the FAA, and for that reason, they were allowed to operate beyond line of sight drones. So this company has 10 million of revenue. It's not a lot of revenue, but it's up 500% year over year. Not bad. They are losing money. They do have one customer making up 90% of their revenue. They are selling drones to some Israel businesses. The company is headed in the upwards direction right now. We'll look at the chart, but the earnings reaction is certainly choppy. Sort of looks like a rack of ribs. We'll look at in a second, but definitely higher than before earnings. And if you're not here for this volatility, you're not a 10 million revenue company speculator, have no fear. We'll also talk about a company called Woodward, which had $1 billion of revenue and just had earnings a couple days ago. So another aerospace and defense name that is more stable. This is not financial advice. I hope it helps. If you are joining us before Cyber Monday, take advantage of that $19 Cyber Monday deal at stockscommunity.com.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Okay, so here's the deal. ONDS received FAA certification. They meet the standards. They got the waivers for beyond visual line of sight. They're pretty much as green lighted as a drone company can go. Of course, if you can't do beyond visual line of sight, you're really limiting yourself in terms of warfare applications, which, as mentioned, I mean, this company is in the broadly electric vertical takeoff aircraft. So that's Joby Aviation, that's Archer Aviation. Those companies are sort of in the same bucket. Here's Ondas. Here's that choppy sort of baby back ribs type pattern it's been doing recently after earnings. It's up significantly from that earnings price. It just took some time to get there. And during that time, the market really contributed to that look on the Ondas chart. So all things considered, this is a solid earnings reaction given what the market's done during that time. Small caps are up, so that helps Ondas as well. There was some data coming out that I guess was weak. PCE, I'm not Mr. Macro, but rest assured, someone else can make up stuff about how that affects the market. What we can say loosely is that it sounded like there was a Fed statement where rate cuts are more likely to happen in December, which helps small caps. And you see that in the IWM, you see that in RTY, and that should help Ondas as well. Now, there are some other drone companies as well, UMAC and RCAT, but these companies have just not really shown any signs of life since that early October sell-off, which marked pretty much the beginning of the end for all the speculation names. Rare Earth, Quantum, you name it, they pretty much all went down. So Ondas is showing some signs of life here. That revenue beat is significant. Still a loss, as we can see, but all in all, it's pretty positive in a market that is, Palantir had great earnings, sells off. Nvidia had great earnings, sells off. So it's nice to see some positivity for sure. They did beat earnings estimates. Okay. This is actually Woodward. What the heck am I talking about? Ondas is down here. They were in wireless. Okay. So if we look at the actual company, this is the most recent money they raised, 400 million at 1150. So that's right here. So 1150 is a pretty high price compared to where it's trading now. but they raised the money, so if anything, it makes it slightly less likely they're going to sell a bunch of shares into the market at the market here, which can depress the share price, right? Add a bunch of supply into the market. So what we have to say is, what are we going to do here? Well, it's a $3 billion company. Again, wireless was the backbone that moved into drones. They don't really need a bunch of cash, which is great, but they still have the ability to offer, even though the risk is not super high. So what that means is they have this shelf registered where they can raise $30 million, so they can sell shares into the open market at any time. So what are we going to do? We're going to be aware of that, but not too worried, okay, given that they had this solid earnings and they have some cash, 400 million. So that's helpful. Here's the guidance for Ondas. This is what we want, not Woodward yet. 30 million increased, and they set a preliminary target of 100 million. So tripling again from 5xing this quarter, year over year, to 100 million next year, tripling year over year, full year revenue guidance. Pretty crazy. We'll see what happens. This is a little worrisome always. Stock compensation is great. You know, everyone's stoked about Elon's pay package because Tesla's a company generating billions of dollars of revenue. When it's a little company, you kind of worry, are these guys going to run for the door? So you have to be a little careful with that. This is, I also mentioned, 90% of the revenue came from one customer. The connection to Israel business, it's not surprising given the drones. And so, yeah, I mean, no comment on that. It's not like the most non-controversial revenue source, you could say. So we'll see what happens. But all this really is a short-term bet, as always, on solid earnings. I mean, this is no joke, 500% year-over-year revenue increase. And they have cash, they raise guidance. They're in drones. They have this connection, which is a rumor, but reported appointed ambassador to the Netherlands. And then they also have this, obviously this was months ago, but they did have this FAA order that it's called Unleashing American Drone Dominance. And essentially it allowed beyond visual line of sight, which is great for all these companies, not just Ondas. However, again, as we looked at these other companies, AVAV and KTOS, we'll look at KTOS in a second. This is more of a defense aerospace company. But the drone companies are UMAC and ARCAT. So those all benefited from that executive order. But that was a while ago now. I mean, if we zoom out to June, that was sort of the beginning of this run for all of these. UMAC, not so much, but ARCAT, I mean, that's significant before they all sold off 100%. And now zooming out, I mean, this one looks like it still has some juice. It has this higher low. It is a year-long chart, so, I mean, time flies, but it definitely looks the strongest. This is almost back to the levels from, I don't know, early 2025, you could say, and UMAC, same. So with that said, that's the idea. If you're looking for a company with $1 billion in revenue, and Ondas is definitely not that. Woodward might be a better, stock for your portfolio. $2 per share earnings beat. Pretty solid reaction, as you can say, but also not so far that it's run away. So it looks like 3 days here. It's actually, this is Sunday, this is Monday, and this is Tuesday. So the earnings was after hours on Monday, which meant that at the end of the day today, we finally have a level at about 300. I mean, it's a little below 300 to risk off of. So you can take a position there, and you're looking like, could this become a Guardian Health where you take a position and, maybe you get stopped out, but maybe you can get back in and look for move up. This is not small. This is more than 15%. You know, could it be a GM? Same deal. You never get stopped out. You just have to have the patience to hold for a couple months, really only 1 month. And then you get your, whatever it is, 8%, 10%, something like that. So not all the earnings reactions have been great, of course, but there have been some signs of life. And there are some other companies setting up with recent earnings as well. This is one of them as of today. It's just that in general, retail also had a good run. Kohl's had solid earnings that contributed to that. In general, these earnings sales guidance aren't quite as good as Woodward. So that's the reason to talk about Woodward. They also do have the aerospace and defense connection. And those names can run. KTOS is an aerospace and defense name that did run. It's not running right now. But, you know, it's on watch. There is a left side peak that it's sort of held here. But again, that earnings reaction is ugly. So this is a very different setup than Ondas. Ondas is, well, I mean, you could risk as low as the earnings, but you're more likely to risk maybe. It's actually not that different, okay? It's just that this already's built out for a week and a half. So Ondas is more like GM, except you're getting in, you know, here and still risking this level. It's just that it already retested it. So totally different size companies, though. That's the main difference. So just to have a little peace of mind about what this company does. 15 billion manufacturer control solutions for aerospace and industrial markets. And there are some similar companies. KTOS is one of them. Just to look at the size of KTOS, this is so big. Of course, it doesn't have dilution that's really going to affect the price of the stock. They're not going to raise money selling shares in the market. 15 billion. This KTOS is a big company as well. And it's had a huge run, which is why I'm talking about it. It also has a specialization in drones. So it's a little bit of a crossover between these two companies. And looking at Woodward, this is the earnings. So billion is up 15% year over year and above consensus. So pretty solid expansion in operating margin. So that's good. More money as well available, free cash flow. All was pretty much good. I mean, we'll see, except for this is not good. Forward guidance, not quite as good, below expectations. And we'll see what happens with oil and gas, marine transport. This sector, oil and gas and marine transport, has been a couple of sectors that have done extremely well over the past week or so. Now with the broader market bouncing back, those are not quite doing as well. We can look at STNG as an example of basically a shipper company. And then for oil and gas, I mean, you can just look at ExxonMobil, sold off a little, but they really just follow the price of crude oil for the most part. A little bit of sell-off over the last week. So for that reason, I think the best ideas are clearly not in energy right now. You can look at the energy ETF. It's not doing great. Whereas a lot of other ETFs are doing great. And there isn't a drone ETF that really comes to mind. But companies that had recent earnings that are strong are definitely the play right now as we sort of round out earnings season. We could have a reaction like Nvidia, but Nvidia was a little bit of a special case. I think I mean, who knows exactly why Nvidia sold off, but Palantir sold off as well. So this is probably a little more sheltered from people who are just broadly playing Nvidia and Palantir as basically macro bets versus bets on this actual company. So seems like they're in good shape. And again, they have that connection to drones a little bit through how similar they are to KTOS. They're not as big as the Northrop, the massive companies. They actually do move a little bit, about 4%, which is enough to make a dent. You know, if we look at a 5-year chart, this company has definitely moved. Specifically this year, it's almost up 70%. So It's no joke, even though it's $1 billion in revenue. It's a massive company. So those are the two ideas, Ondas and Woodward, ONDS, WWD. If you like getting these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. And if you want help and a Cyber Monday $19 deal, head over to stockscommunity.com.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Okie dokes.
And there's, of course, also short seller media campaigns popping up everywhere, freaking people out of their positions. It's a very great thing to have regular dips, regular tests of valuation, and to have convictions tested. It's a great thing to shake out weak hands. This is actually a telltale sign that we're in a healthier market, not an unhealthy market that just goes straight up and then has to go down 80%, killing everybody and causing a financial crisis because of the levels of margin that would entail. But instead of the financial media coming out and saying, hey, markets have always historically needed time to breathe and sell-offs are healthy resets and are good for stability and opportunities long term, all I see them say is endless fear-mongering. You must sell now. You're an idiot if you don't sell now. Sell, sell, sell. You are an embarrassment to your ancestors. You are a dishonor to your family if you're buying the dip right now, if you're continuing to hold positions, because bubble. And a lot of the folks that are fear-mongering right now are preaching 100% conviction that stocks must go down, despite the fact that even in the previous bubble cycles that we've had throughout history, a lot of times you've had like 7 or 8 massive dips before the bubble actually popped. And I find it funny how folks that are endlessly fear-mongering over a crash are considered heroes or considered geniuses.
Okay. Yes. I'm not saying to sell everything. Rivian and Intuitive Surgical. $2 billion in revenue, up 25%, 20% year over year, and increasing procedures, number of procedures. So and then Rivian okay. $2 billion in revenue, up 20% year over year. Okay. Rivian did just have earnings, right? I mean, all the companies did. It wasn't great. So it was a loss. It was a loss more than expected. Delivered 13,000 vehicles, 30% increase from a year ago. Revenue jumped 80% year over year. That's a lot. Revenue jumped 80% year over year. Okay. ISRG. $2.5 billion, up 20% year over year. Okay. This one stock can change early buyers' lives. I'm not a financial advisor, but it seems like financial advisors with my research might say to buy as much as possible before November 29th. This company, Intuitive Surgical, had 20% growth in revenue, 2.5 billion of revenue. That's year over year growth that's significant. Anything over 10% is significant. They're in a growing field and a hot field, which is AI assisted robotics. So instead of waiting on Tesla's humanoid potential, which could come in 5 years, could come in 10, could actually be in the home in mass scale in 15 years, this company is in a sector that is evergreen, healthcare, and AI is actually making a difference in very specific, literally restricted form factors of surgical arms that don't have to look like a humanoid. So this company is set up for a big move. It just had earnings and it's got a higher low. We'll look at the chart in just a moment. But right now, it looks like it's very early in its journey to becoming potentially the next Johnson & Johnson, which would be at least a 3x. If you look at other companies that are setting up right now that look similar, there's one that is similar to Tesla as well. The company is Rivian, and Rivian had 10 to 15,000 deliveries, and an even more impressive 80% year-over-year revenue growth. So this is not a video to hate on Tesla. Tesla's actually looking pretty solid right now. It just needs a little bit of a sideways couple of days maybe, and then could get a move back up to basically where it was a month ago. These two stocks look like they're already showing signs of life though, and that's why we're looking at this surgery stock and this also stock that I believe to be early based on the current market cap of Tesla, Rivian, the electric vehicle stock. This is not financial advice, but let's jump into a little breakdown.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Okay, so here's Intuitive Surgical's earnings beat. 2.5 billion of revenue, up 20% year over year. Earnings per share beat analyst expectations. And they've actually had more use of their product. So in an app, that would be like more downloads or more time spent in the app. And then in the real world, in healthcare, it's procedure volume rising. So more robotic assisted procedures, 20% more. And this is their main system that has driven that growth. So that's solid. That's what you want to hear. They did get FDA clearance for a new update of AI-driven navigation and imaging for a very specific procedure, lung biopsies. So that's exciting. That's going to expand and start in the next year. They have a variety of different platforms, all sort of very focused on specific procedures. So this is nothing to do with humanoid form factors or anything like that, even though that's sort of all the videos you see online, right? All these big robots. So they did have share buybacks, which is always a good sign. That's something a big company like Apple would do. And sure, there are risk factors. I wouldn't look too much into like price to earnings or any sort of similar ways to value a company. Over the long term, of course, that's what you want to do if you were to buy this company. But we're not buying it, right? The idea is just to take a little piece and see right now hospitals tend to be paying for it. And yeah, okay, there was a slight downturn, but not really. I mean, if we look at the actual chart instead of ChatGPT, this thing held up. Sure, it started to go and it sold off, but this is about as good as an earnings reaction as I've seen in Q3. Like maybe GM is slightly better. I mean, it looks pretty similar. but there's really no comparison. Google, I guess, is also having an awesome earnings reaction as well. It took a while, but big move up after that talk of Gemini performing better than ChatGPT, or on par at least. So Apple up there as well. Okay. Taking a while, but getting there. This company, of course, not really in the conversation with Google or Apple. Intuitive Surgical is more often considered to be a healthcare stock, right? So XLV is doing awesome. All of the healthcare adjacent stocks are doing awesome. Pharmaceuticals, big move up. Biotech, which is riskier, but big move up on the ETF. I'm just saying I'm not really excited about recent biotech names just because there have been drops like in Unicure and in Intella Therapeutics, which has been pretty significant. I almost wrote NTRA, which has done excellent, but that is sort of a unicorn move right now, 6 days in a row. So we're looking for stocks that haven't gone up. And sure, I could say TVTX is interesting, NAMS is interesting in biotech, but you do take the risks that I just showed of those biotech stocks that cratered on FDA, control group confusion, and then patient with side effects. So for that reason, I think a robot-assisted surgery stock is a little bit safer. It's not a drug. It's unlikely to have a huge drop based on something like that. And it's at a really favorable level, breakout level as well. So higher low, it almost is reminiscent of, on a slower scale of a little wolf move that we recently saw, higher low here, and then we've had a big move up here. This, of course, is in a completely different sector. This is a Bitcoin miner transitioning into an AI data center compute provider for hyperscalers. So translation, they actually do the GPU computations for Meta. But I think ISRG is safer than some of these other companies. On a 5-year chart, this is not, it's not bad, right? I mean, it has the 2022 dip like all the companies, all the big companies. It has the tariff dip like all the big companies. And it was a little late to bounce up. This year has actually been pretty ugly, right? Yeah, there's a lot of healthcare did this in the second half. I mean, if we look at Eli Lilly, only recently had this massive run. It was all the way up until, I don't know, September that pretty much went sideways when it's hard to say. I mean, I guess you could say this is the April low, right? So it definitely took a while to start going up, but it's possible that it's not really wise to compare these big companies to the market at all. I mean, look at the energy companies did the same thing. They just went sideways for most of the year. So with all that said, this is the stock that's probably more charts than you can handle or than I can handle. But I think the chart really tells a story. I mean, we can talk about sort of speculation on the growth of robotic assistant medical device surgery, but I think the application is pretty obvious if it can reduce errors. And there's these massive companies that are already pushing into this field as well. Medtronic is really well known. And then Stryker, also well known for orthopedics. So joint replacement, these are multi-billion-dollar industries without a doubt. So we'll see what happens long-term. In the short term, I think there's definitely a little breakout opportunity here. And this company does have Johnson & Johnson among its peers. And if we just look at the growth story, this is 150 million market cap. If we look at J&J, that's like a 400 million or something market cap. So there's definitely a growth opportunity. A 3x is definitely possible, which is pretty impressive for public markets. And this is an international company with the, the developed nations, of course, being where it's implemented first, but this isn't a humanoid play. That's important to mention because everyone's been talking about humanoids. People have been talking about remote operated humanoids too. And ISRG is remote surgery is looked on way more favorably than a remote operated surgery, than a remote operated humanoid. Sorry, I was just looking at a comment on the live about DLO. Someone is just obsessed with this DLO. I don't know what to say about DLO. It looks like it's not doing so hot, to be honest. Sorry. But I mean, a lot of companies look like this. They went down in the last month since I mean, this one interestingly had a jump on 1010, but it's hard to get super excited about real estate or some of these other sectors, which has just gone sideways. You know, energy, as I mentioned, went down recently. Really, the reason I'm looking at healthcare is doing awesome. So that could change. This could be a lagging indicator, but we're definitely at a really important breakout spot. So that's ISRG. That's plenty about ISRG. And then Rivian, I do want to give another idea just because you might say, I don't invest in healthcare, which is fine, you know, given the recent drops that I showed. These are biotech companies, so it's a little different, but I don't blame you. So Rivian, kind of shaping up as well. This one over the last 5 years has been not so exciting, right? I mean, just since 2023, this company has basically done nothing, but there has been some momentum opportunities. So if we look, there are little bursts, and that might be not interesting to you as an investor. But if we look at, say, August to September, the end of September, September was a huge month in the SPY, and Rivian went up 30%. So sure, there was this pullback, but even if you just caught, you know, this sort of flag, which maybe you did, maybe you didn't, you can get 10% of that, which you might think is a joke, but the liquidity is 40 million times $10 a share is, you know, $500 million a day. So you can plop $4 million in here and get 10% on that, make 400K in a week. I don't think that's a joke. So here's the opportunity right now as I see it. It's sort of at this line right here after the recent earnings. This is a loss, so it's not great. But if we look at the actual performance, revenue jumped 80% year over year to over $1.5 billion. So they did have consolidated gross profit. This has a couple of qualifiers. Gross profit is not a profit, but they did have some revenue from software and services. They have this venture with Volkswagen, and I'm pretty sure software and services refers to licensing to Volkswagen. So this is their loss. They didn't have quite as big a delivery number guidance as before, but you know what? That 80% revenue result is pretty impressive. $1.5 billion definitely is no joke. And if we look at basically who they're compared to, well, this is the crowd. Okay, Tesla and Lucid. Lucid is very different in terms of share price behavior. Rivian had 50,000 vehicles last year. Tesla almost 2 million. So not really in the same conversation. Okay. But they each have their strengths. So they basically are doing the high end thing. They're trying to start the way Tesla started, actually. And we'll see what happens. But you don't really have to bet against Tesla to bet on Rivian. This is a short-term play. And Lucid, I'm not even mentioning much about Lucid because they're very small. They're very small. So if we look at their stock price, this is maybe why it's not that interesting. I mean, do you want to bet on this company right now? I'm sure they'll do well in the long term, maybe. But it doesn't look that interesting right now. So we'll see. Long term, this is basically the play. $50,000 vehicle trying to get to 200,000 vehicles a year, which will be pretty interesting compared to Tesla's 1.8 million. New plant in the US, which the Trump administration is going to like. And we'll see what happens. But long term, they're definitely in the conversation with Tesla, which is a crazy thing to say. You definitely see them. I mean, I see them around Rivian cars. And they're not, the subject of any sort of documentary, which a certain unnamed electric vehicle company has been. So I think it's pretty much all you can say about Rivian. Here's a level right here, 15 and 20, looking for a move up to 18. That's the idea. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. If you want one-on-one help, head over to stocksforme.com and take advantage of that Cyber Monday deal.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Hi, folks. I've been seeing your comments in the chat. The crypto spam is out of control, but maybe I'm just too dumb to block that. DLO, I mentioned, I'm not super stoked on DLO. I could be totally oh, you see, I thought this was Digital Realty. This is a payment platform. Still, it's in Uruguay. It's 30% institutional ownership, and the chart looks like this. I just can't tell, Michael, if you're spamming or if you actually want this company or interested in this company. Maybe there's a left side peak play bounced off the 200-day moving average. It's not crazy. Earnings reaction looks pretty ugly. But we'll leave it at that unless you comment again.
This is. Take a look at the famous Michael Burry, for example. No hate or anything like that, but just think about this. Michael Burry famously came out in January of 2023 and he said, sell. And when he posted that, he was applauded as the great protector of retail money, the defender of the everyman. If you didn't listen to Burry, I mean, you weren't listening to the big short guy. Since then, the S&P 500 is up around 60%. The tech-heavy triple Q index is up just under 100%. And even if markets never go back to the original levels that he said sell at, well, eventually we're going to get a crash. And you know what the media is going to say? They're going to say, look, Burry was right again. And that message will motivate yet another generation of people to be fearful of the markets and to stay all cash, where the government will continue to destroy their purchasing power. If I showed you two charts, chart A and chart B, which would you rather have your hard-earned savings in? Chart A, which has gone down 53% in the last 30 years, or chart B, which has gone up around 1,399% in the same 30-year period.
Oh God, those charts are terrifying. Neo versus Rivian. What do you think, Tamagotchi? I know everyone gets excited. God damn, the crypto is off the chain. Stop with the crypto pre-sale. But I did see your comment about Neo versus Rivian. I don't love this Neo chart right now. Right? It looks a lot like DRO. Oh boy. DLO. Rivian's got to look better than that, right? Shaping up a little. Looking for a little burst here. Maybe this will sell off and go sideways for a bit, but if it forms a higher low, it definitely looks like it could go another 10%. Right? At least. Neo is a little tougher. I mean, it doesn't even have a left side peak. It does down here. But right now, oh, it just had an earnings. I see. Just had earnings. Yeah, maybe give that earnings reaction a couple days, see if it does a U-turn IBM style, but probably not, right? Bullish on Neo, waiting for them to be profitable. That's fair. Yeah, they have that battery swapping technology. I'm not a long-term investor, at least not in this capacity. So if you got a thesis on them and you want to pick a level and just hold it, that's fine. I mean, it is a $4, $5 stock. So, you know, something crazy could happen, but short term, it's tough to see the vision. So Keysight did have earnings. This is the chart I'm looking at with Keysight right now. Pretty interesting. It sold off a little, which is fine, profit taking. And they basically do security. It's actually extremely hard to tell what they do. Scientific and technical instruments. It's like I have no idea what these guys do. Test and measurement, electronic equipment test. I'd love to get some tickers. Teradyne. Okay, that sounds familiar. Semiconductor testing. Oh, National Instruments. There you go. That's like the scientific calculator. I just forgot to respond fair, I would say, to our Neo. 5G. Okay. Most important, really, is as far as what these guys do, is this recent earnings result, which is right here. 10% year over year, free cash flow, and then continued growth. So solid guidance, solid earnings, solid revenue. This is the earnings per share beat. So pretty much all the ingredients, anything could happen, but Caterpillar, Cat AI. Let's talk about Caterpillar revenue. 18 billion, up 10% year over year. Earnings per share beat expectations. $40 billion backlog. Yeah, this is the interesting part. They're helping build data centers. So that's what we were getting at here. I think it's what percentage of their revenue is power generation for data centers. That's what we want to know. Okay. Partnership with Vertiv. Heard of them. I don't think they're publicly traded. I don't know. Actually, they are. Aren't they VRT? It's now literally Vertiv, VRT. I think so. Okay. Talk connection of VRT to CEG to hyperscalers to CAT. I'm kind of stretching, but not really here. Like they all need each other. There's got to be some actual meat on the bone here. Some PR. There we go. Okay, so this company is sort of connected to Nvidia. Who knew? Nvidia connection. All right. Here's the revenue. Whoops. All the way back in electric vehicles. Here we go. Caterpillar keys. Somehow I'm talking about keys over here. What happened? Did I merge my chat GPTs? I don't know what I just did. I might have merged my chat GPTs by mistake. Oh well. last question. So we'll close it out here. If you have any questions, comments, thoughts, drop those in. Otherwise, we'll put a bow on this Nvidia talk. 30% of total sales. That's pretty impressive. So that's not really what you think about or what I think about when I think of Caterpillar. Let's get some numbers here. Back at the front of the mind here. Here we go. Caterpillar. 17 billion, up 10% year over year. Earnings per share beat. Backlog near 40 billion. And Keysight, which, let's be real, I really have no idea still what they do, but that's okay. 5G. Lab test equipment for wireless. Defense. Sorry, I'll stop hitting the microphone repeatedly. $40 billion backlog, 17 billion revenue. There is one stock that is about to skyrocket. The company is getting 30% of its revenue from power generation. A big portion of that is related to data centers. Data centers need a ton of power. We need a ton of data centers to build all the compute for OpenAI, for Meta, etc. The company is Caterpillar, ticker symbol CAT, and it's not the Caterpillar of dump truck or backhoe, basically, imaginative, association. This company is very much in power generation, and you can imagine you need to build out big engines for big trucks, and they can build out big engines for power generation, turbines, etc. as well. So the company is much more acclimated to AI than you might expect. So they had $17 billion most recently in Q3. The earnings reaction is super solid. It's holding up well. It's a 10% year-over-year growth, which is not incredible, but it's solid. And then they also have a $40 billion backlog, so that's a big deal, giving them a runway of the growth story, really, is what it is, putting them squarely in the hyperscaler, power generation, data center conversation. All these data centers have to be powered and built out, and Caterpillar is going to help with that. So they do have a collaboration with Vertiv as well, ticker symbol VRT, which is a power company. And Vertiv has been working to build 800 volt connections basically with Nvidia. So indirectly, Caterpillar has this Nvidia connection, which is a big green light for their growth prospects for the coming 5 to 10 years. And there's one other company I want to touch on. It's Keysight, ticker symbol Keys, Keys, where if Caterpillar is not really your thing, I know these stocks move slowly. Keysight did recently have earnings, so certainly moving quickly right now. And the earnings were solid. Pulled back a little bit of profit taking, but it's at a really favorable level as of the time of the recording of this video. So take a look at Keysight. It's sort of a 5G wireless scientific instruments play, which has a little more of a evergreen revenue stream, versus Caterpillar might be a little more tied to, is everyone going to want data centers, or is anyone going to want data centers in their backyard? How easy is this permitting going to actually be? Are they going to have to make contracts with Alberta, the Texas of Canada, to build these data centers, and then, get the power, get the compute connected back to the US. We're going to see what's going to happen in the next few years. Right now, Caterpillar looks interesting, but if you want a safer play, in my opinion, with a clear risk level, Keysight is also in the conversation, KEYS. So let's jump into these two tickers, starting with Caterpillar. Not financial advice.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So Tamagotchi in the chat on the live brings up an important question too. How do changes in the housing market affect Caterpillar with potential recession territory? Are they still worth it right now? And I would say, well, I think the chart itself shows that they're pretty strong after that earnings reaction is holding. A lot of other companies are not holding. And then if we look for recession territory, sure, maybe we're seeing some selling off in Nvidia, even as solid earnings and sales come out. Same with Palantir, selling off, even as those earnings per share is a beat, and the pretty much top of the market, it seemed to be marked right about there on November 3rd so far. But we're coming back, and there was talk of that rate cut happening in December now, higher chance of it happening. And home builders are moving up on that XHB. So stocks that are helped by rate cuts, which is basically, the housing market, are performing well right now. So there's always going to be changing housing market factors, but right now rate cuts is not one of them. And I'm not really sure this company is that dependent on the housing market as compared to the power generation market, as I previously used to think. I mean, this is Vertiv. This is the power company holding up right now, and CEG. I mean, these energy companies coming back a little bit right now. If we just look at energy as a whole, sort of sold off in the past week and a half. But right now, Caterpillar looks good. So it's a long-term play, I don't know, but as far as buying with a 560 risk level, looking for a 5 to 10% move, I think this is definitely one of the best plays to do that. And 5 to 10%, just as a little reminder for people who are new to the channel, it's no joke. I mean, this is a 2 million share, $500 stock. So 2 million times 500 is $1 billion. So someone theoretically, not saying this is anyone who's watching, but could take a position that's 100th of that, which is, 10 million, drop it in, click of a button, not even move the stock at all. There's we have a $3 spread, but it's after hours right here. So that's going to super narrow. So you basically risk $1, you look for $30. So pretty exciting, even though 10% sounds like nothing. Here's that revenue, up 10%, earnings per share beat, backlog is near record 40 billion. And they are shifting towards energy and data center demand. So, this is the boring way to look at it, bulldozers and mining. But it brings up a good point in the chat as well, Tamagotchi, of they are probably building out big housing developments as well. I didn't see that right here. But I do think that this collaboration is a big, big deal. Power and cooling for data centers is going to give them seat at the table with basically Nvidia's partners, which Vertiv is. And they've got some institutional recent investment. 70% isn't crazy, but I'm also not too worried about that. I mean, Keysight is 87%. This is a $200 billion company. I mean, we can look at Vertiv as 70%. I mean, it's not institutional ownership, I don't think, tells the story for these non-biotech, non-healthcare stocks. So I wouldn't even really worry about that too much. It's like when, Michael Burry does this or Kathy Wood says this. It's like, yeah, it's fun to talk about, but it's not really always that fruitful or constructive. So looks like there are some tariff hits as well, and we can see that in the chart, I believe. Definitely followed the market with a massive rebound. But it seems like its stock's doing super well, and it's important to look at relative dollar value. I mean, $7 million of CAT shares is just not a big deal compared to the market cap of the stock. So I think this power generation move is a big deal, literally. I don't think they've announced any actual numbers as to the size of this deal that they might be getting with the data center partners, but Vertiv has collaborated with Caterpillar, and Nvidia has collaborated with Vertiv, so indirectly, that's the connection to Meta, and we'll see. I don't think there are. I mean, ChatGPT is, helping us out here, seeing if there's further connections, but I don't think that there necessarily are any further connections than have already been mentioned. I'm sure Caterpillar would have announced them. It's just the strategic collaboration on November 18th. And if we look at the stock to sort of see if that made a dent in the actual stock price, well, that was actually so recent. I'm not sure it's even really fully baked in. November 18th is just right here. So it definitely marked a nice bottom if that was the case. So see if Vertiv stock went up as well. That's a good sign if it did. Kind of just followed the market. This is the 20th, was a big sell-off day in the SPY. So I wouldn't look too much into that collaboration date specifically, but it's just a actual evidence that they're actually connected to Nvidia in a way. So we'll see if more big deal numbers come out. There have been big deal numbers released about subcontractors, hundreds of millions of contracts for subcontractors building out data centers. These subcontractors, some of them are publicly listed, worth billions of dollars, and they're buying electrical companies worth, hundreds of millions. I think, if I'm not mistaken, CRS might be in that conversation, and other stocks that it's doing pretty well. So we'll see what happens. And I do think there are other sectors that are interesting. I mean, we talked about drones earlier in this live. ONDS is certainly in that conversation, but the other drone companies, chips companies, are just selling out. This is just an example of one that's had a lot of euphoria recently, GSET, that has just shown no sign of a bounce. It's sort of in the same conversation of UMAC and Red Cat, unfortunately. So unless it has, more news, you have to sort of leave it to the wayside and focus on these big multi-billion-dollar companies. So that's the Caterpillar story. Let's move on to Keysight. We can't just dominate the conversation with this one company. I mean, there's companies coming out every day with earnings. It's kind of the end of earnings season, but this is a solid reaction. A little bit of profit taking is completely normal. And I do think that this company could turn up. It could hold this $200 psychological level. If it just gets above there, that's a really solid level to risk off of. Look for 220 as a profit target, risk a few bucks, and you have a $30 billion company that has solid earnings that you can look to take a position in. And this company, Keysight, does have a connection to basically 5G, 6G. And yeah, I mean, nothing makes sense in this market. Palantir sold off on earnings. Google is doing excellent on earnings thanks to Gemini, but Nvidia sold off. But here's a company that came out with earnings and $1.5 billion, almost $1.35 billion, up 10% year over year. Almost $300 million of cash flow, so that's super strong. And I think these are some decent plays. So here's what you got to look for, right? I mean, I'm not Oracle, right? But I can say, if we look at Oracle, this company has done horrible as an example. Okay, so some of these companies that have the biggest OpenAI deals have just sold off. Walmart has been the exception. Seems to be holding up. Earnings is doing well. Money actually flowed into this, even as it flowed out of the market on that sell-off day on the 20th, which was really rough. I know it's hard to see it because now we seem to be in this sort of bipolar market. We're up 4 days in a row, and everyone's hunky-dory again over this liquidation crypto day on the 10th. But just 4 days ago, we were worried about, a big move down to, a lot of people were worried about a big move down to pre-tariff levels. So right now we have to sort of look at what's in front of us and say, Is there another Guardian Health that's going to happen? Is there another GM earnings move that's going to happen? Now, of course, there have been their share of earnings misses, Netflix, SMCI, and at the same time, some companies have had big growth. I mean, ABAT, solid earnings. I mean, certainly, that was a while ago. The most recent earnings was a sell-off, so that's actually a terrible example. But AVGO is a better example of most recent opportunity to the upside, really driven to that back of that Google move. So that's sort of what we're looking for. Any connection to Google, any connection to Nvidia, which Caterpillar has through Vertiv, and any connection to a really solid earnings result, which this is really solid. It's a beat on earnings per share. It's a beat on sales. It's a increased guidance. It's basically everything you could ask for, aside from a 50 to 100% growth on earnings, which is pretty unusual. So the benefit of these is you don't have to say, is 5G an investable category? Is IoT an investable category? Even as AI seems to dominate, is lab test equipment, infrastructure, equipment that goes into data centers? Is this exciting semiconductor test tools? That's basically what this company does. It's basically like a lab supply company for the big tech companies or the big tech adjacent companies, Nvidia, some of these smaller semiconductor stocks, which have been doing great. $4 billion revenue in 2020. That was years ago. I'm going to be honest, I don't really know what's going on with this company specifically, besides that it has great earnings, and it's really hard to find other companies that have great earnings right now. I mean, I know these other companies, Teradyne, they've been doing solidly, and then National Instruments, we all know because we use them for calculators in high school for math and stuff, but Teradyne is doing awesome, and earnings is holding up for sure. It just kind of had an ugly day here, so it just seems to make more sense to find a stock that closed right here at a level. You can buy above that, and you get the risk this $200 level. So it's kind of a less fundamental, more of a technical play. So that's the idea, along with Caterpillar. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. If you want to participate in the live, which folks have been doing, this is live right now. Of course, the recording will not be. Watch for the live and join in, ask some questions. And if you want a free course, hit that subscribe. You'll get that how to buy stocks before they go up course, posted once a month in the YouTube posts for subscribers. I'll see you in the next one, and check out that $19 Cyber Monday deal to ask all the questions you want. 7-day trial, and the testimonials are pretty good. I mean, the results were pretty good to get those testimonials. So market is never totally sensible, but seems to be bouncing back. So head over to stockscommunity.com if you're interested in that. I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.